Well, this morning, the SGX Nifty is indicating a bright shade of green. Look at that, up about 63 odd points. Lots of positive cues as we wake up this morning. The Nifty, remember, has given gains of over 900 points in the October series. But our research team is here to tell you about the stocks to watch out for as we head into trade today. SBI Card is the first one on our list. Abhishek is here with the fine print. Abhishek, morning.
Morning, Sonia. So to begin with, SBI Card over the last few quarters off from Q1 FY21 to now has seen its revolver rate or loans which become overdue fall from 45% to 24%. So this has had its impact on the yields. The yields have declined sharply from 22.8% back in Q1 FY21 to right now about 15.1, and hence you have taken a hit on the net interest margin as well, which has fallen anywhere between 650 to 700 basis points during the same period. So credit cost remains elevated at 5.6% versus 5% in the previous quarter. They have seen their asset quality improve. Largely, it may be on account of write-offs undertaken. The total income is up 28% YOY and about 5.8% sequentially, while the PAT is up 52.5% YOY and down about 16.2% quarter-on-quarter. The PAT has come in around 526 crore, while Motilal Oswal estimated the PAT to be at 590 crores. Back to you.
Okay, thanks a lot for that, Abhishek. Point taken. But just to play devil's advocate, SBI Cards was also at the receiving end of a lot of RBI changes on credit cards. If you remember, tokenization, as well as weeding out unused cards. It affected all banks, but for SBI Cards, this is the only business. So it tends to have perhaps some impact. We should have to ask the management what are the one-off impacts of these rules. But with that, let's go over to Indus Numbers. Vivek is here to tell us the key takeaways. Vivek.
Well, Indus is in focus on the back of its Q2 results. Now, we had highlighted earlier about how collection challenges that the company was facing in terms of receivables from Vodafone Idea is something that could mar this quarter. And along those lines, the company too has reiterated the fact that collection challenges from major customer, that is, Vodafone Idea, is something that continues to impact its results. Now, when you're talking about the revenues came in above the CNBC-TV18 poll, coming in close to 7,967 crore. Margins, however, came in below expectations, coming in at 35.3%. The core EBITDA too came in below expectations, coming in at close to 2,812 crore. And when you're talking about the profitability, too came in much below the CNBC-TV18 poll. Now, when you're talking about what exactly has happened, the company has once again gone ahead and made a provision of close to 1,770 crore against Vodafone Idea receivables in the second quarter. Remember, this is in addition to the 1,230 crore provision that it had made in first quarter. So clearly, most of the analysts too are highlighting the fact that this resolution of these dues and receivables from Vodafone Idea would be key going forward as far as Indus is concerned.
Okay, all right. Thanks a lot for that, Vivek. Well, let's hop across to Sonal. She's here to tell us about Tata Chemicals. Well, so Sonal, it was a bit of a mixed set of numbers, right? Top line much better, but margins a little lower?
Margins were a little bit of a miss against what the street was working with. So on a quarter-on-quarter basis also you would see a decline, but the management commentary is quite strong, and that's why I'm going with green today. Also, we'll get more details on the conference call today. In terms of numbers, a revenue growth of 40%, EBITDA was up 84%, margins, they expanded 500 basis points. The expectation was of 800 basis points increase, and that's why that missed. Profits were up 176% this time around on a YY basis. Now, the company says there were higher realizations, especially in their export markets, that is the overseas units. That is because of higher pricing. Gas, coal and freight costs, though at higher levels, have stabilized from current levels. So that is very positive, because the biggest fear for Tata Chemicals was higher raw material costs, because they have a big exposure to Europe as well. And more management commentary is something that we'll get on the conference call at 12 today.
All right, thanks a lot for that. The stock has actually had a pretty decent run. I mean, from 790, which was the low in June, it's now all the way at about 1200 levels on Tata Chemicals. So just keep your radar on that stock. Very good set of numbers. But of course, margins slightly lower than what the street was estimating. Let's go across to Ekta now. She's tracking Sun Pharma and Taro. Ekta, how did it look?
Well, for Taro, which is basically Sun's US arm, came out with what was a disappointing set of numbers. So the revenue was absolutely flat on a year-on-year basis, operating loss of $6.81 million and a net loss of around $2.8 million. It was due to price decline, and it did not really, the revenues did not rev up despite a recent acquisition as well. So the street seems to be a little worried about what Sun Pharma could report, especially in terms of the EBITDA on November 1st when they come out with their numbers. There could be an estimate of around a 5% plus miss to the analyst estimates, which are already factored in terms of the Taro numbers before they came out for Sun.
Okay, all right. Thanks for that, Ekta. Well, let's hop across to Abhishek. He's here to track a few more numbers. Abhishek?
Well, Nigel, to begin with PNB Housing, for the first time in last 14 quarters, or the highest loan growth on a sequential basis on balance sheet they have seen in this quarter. So asset quality has improved given the fact that provisions are elevated. So it looks like there has been a write-off. Disbursals remain strong at 21.5% YOY and about 4.1% sequentially. The net interest margin and spreads are at 23-quarter high. There may be one-off, we need clarity on the same. Net income is up 30.3% YOY and 50.5% sequentially, while the PAT is up 12% both YOY and quarter-on-quarter. AB Sun Life on a sequential basis, the revenue is up 3% quarter-on-quarter. Operating profit margins remain flat at around 56%. The PAT is up 87% quarter-on-quarter. The quarterly average AUM is up 0.4% quarter-on-quarter. However, the equity portion in the AUM is up 2% on a sequential basis. Back to you.
Okay, thank you very much. Sorry. Thank you very much for that, Abhishek. We've more chemical companies. Sonal, you're back with Anupam Rasayan and Supreme, is it?
Oh yes, I am. Anupam Rasayan, good set of numbers. A mild miss on the EBITDA front, but there's nothing to complain about in the numbers. Revenue up 25%, EBITDA up 45%. Margins are up 400 basis points for the company, with profit growing by 15%. Now, company says that they continue to see upward bias in terms of volumes to major clients of theirs, and they're also benefiting from the Europe Plus One theme that we've been talking about. And this is the reason why they have signed more contracts with European companies as well. The QIP raise that the company recently did will be used for a new project and also for fluorination pipeline. On the back of this, Jefferies has mildly increased their target price to 1,030 versus 1,000 earlier. I can't say the same for Supreme Petrochem because it was a very weak set. On a quarter-on-quarter basis, revenues are down 17%, EBITDA down 60%, margins are down 1,000 basis points, leading to a profit decline of 68% for the company. So that stock should be in the red today.
Okay, thanks a lot for that. Well, let's go across to Vahishta. She's tracking Gokuldas Exports and Vaibhav Global this morning. Vahishta, over to you.
Thanks, Sonia. For Gokuldas Exports, though the revenues have jumped by 28%, and remember this comes in a seasonally weak quarter, the exports run-up has been quite good. It's up 24% on a year-on-year basis. The company has highlighted that the US monthly apparel store sales have also been on a rise. The company has already incurred 51 crores of capex in the first half of the ongoing financial year and plan another 106 crores in the second half of the ongoing financial year, while for FY24 it's going to be higher at 125 crores. Moving on to Vaibhav Global, the revenues were more or less flat, jumped just about 2%, while the margins have come in at 7.6% versus 10.7% in the same quarter of last year. The company has said that the customer base is at 4.9 lakh, which is up 5% on a year-on-year basis. The private label brands currently are at 25% of the global B2C revenue, which they plan to increase to 35%.
Okay. Thank you very much for that, Vahishta. Let's quickly recap all the top stocks that we have just discussed. Stocks with positive news flow, mainly results. Tata Chemicals, PNB Housing Finance, Aditya Birla Capital, Anupam Rasayan and Gokuldas Exports. Stocks where the results were slightly negative, SBI Cards, Sun Pharma, Taro of course, Indus Towers, Supreme Petrochem and Vaibhav Global. Well, with that, let's invite Manisha Gupta to tell us